Hello trade pros, and welcome to another video from TRADEPRO Academy. Today we're going to be talking about the new Ethereum futures on the Chicago Mercantile Exchange. If you're a crypto trader, you're definitely going to want to listen to this, and if you've been thinking about trading cryptocurrencies, now is an amazing time. Let's talk about this new Ethereum product, how it works, what futures are, and how to get started with your trading. Let's dive right into this video. So what are futures? The futures market is essentially an asset class on many different types of products. In futures, you could trade grains, energy, equity indices, metals, currencies, cryptocurrencies, and a number of other products. Futures are by themselves a derivative and similar to an options contract. There is one big difference, and that is that futures actually on expiry date could lead to an assignment depending on the product that you're trading. This means that if you hold oil one contract and you hold it into the delivery date without closing it before expiry, you could be assigned on taking ownership of 1,000 barrels of oil in physical possession. The good news is these new cryptocurrency futures are all cash settled, meaning you do not have to take any possession, and the gain or loss is just a paper transaction and realized on expiry. The futures market is a big place that institutional traders transact. This is because there's a lot of liquidity and the markets are open 6 days a week and 22.75 hours of each day to be exact. The futures market opens up at 6 p.m. Eastern time on Sunday and trades until Friday at 5 p.m. The only time it closes is between 4:15 to 4:30 p.m. and 5 to 6 p.m. of each evening. This is all in Eastern time zone as well. Now, because the markets are open, you're gonna get an opportunity to trade around the clock. As a crypto trader, the markets are open 24/7 anyways, so you're used to checking on your positions, adjusting your trading plan, and being prepared any given moment of any given day. Now, when we talk about futures market, there's many different exchanges across the world. The one that these new Ethereum contracts are listed on are the CME. The CME stands for the Chicago Mercantile Exchange. It is the capital in Chicago of the entire futures market. This is where really hot products like the S&P 500 futures, ES, WTI, oil, CL, and many other products are traded as well, including gold. So this new contract was just announced 3 days ago that it would come out on Ethereum with the symbol ETH. This is significant because on December of 2017, the Chicago Mercantile Exchange launched their first crypto product on Bitcoin futures with a ticker symbol BTC. When they did this, it marked almost exactly the top of that market, and it prompted a massive sell-off that got us down into the 3,000s from the all-time high then around 19,900 and so. So the expectation here is with the availability for the institutional crowd, they really at the time took an opportunity to hedge their contract positions and to also be short of this new cryptocurrency asset at the time being Bitcoin. In today's market, I really think institutional traders have adopted cryptocurrency a lot more. And while there's a little bit of nerve and tension around Ethereum going live on the exchange on CME, we don't think and expect to see that kind of downside for Ethereum. But it is something to note. Now that the institutional crowd gets into a marketplace, you tend to see a lot more double-sided trade than just a vertical move to the upside. Since launching the Bitcoin cryptocurrency futures in 2017, the CME now trades on average 11,179 contracts a day. This is equivalent to 20% of all futures volume across the globe in that one contract on BTC that's listed on the CME, Chicago Mercantile Exchange. So let's talk about what this Ethereum product is going to look like, what it means for your trading, and how to get started with trading futures the quick and simple way. One of the big benefits of the futures markets is the really high amount of leverage you could take. With a small amount of capital, you're able to move a lot of position size, which is fantastic when you're profitable, but could really be detrimental if you're not used to managing risk like a professional trader. This is the one thing you want to know from the get-go, is that it's extremely risky to be spending all the money that you have in your account to get into positions. It's better to create a strategy and ladder into it one piece at a time until you get the full exposure you're looking for. We'll do a video on that later. For now, let's talk about this Ethereum product. First and foremost, the code is going to be ETH. The contract size is for every one futures contract that you purchase, you're getting access to 50 times the value of ETH. So this means every one contract gives you 50 ETH or Ethereum coins in notional value. This ETH product is similar like any other futures contract on the CME. It opens at 6 p.m. Eastern on Sunday and closes for trade the following Monday at 5 p.m. Eastern, only to reopen again after a 1-hour shutdown at 6 p.m. This is something for you to know because if there's a lot of volatility and movement between the 5 to 6 time frame window, you aren't going to be able to move your position, put your stop where it needs to go, or take profit. For this reason, the margin requirements increase significantly between 5 to 6 p.m. and you're going to be locked out of your ability to manage and control your position. This is why we think the ETH product on the CME is best for day traders who are looking to find intraday momentum and to ride the wave while it exists, but not necessarily hold it for the long term on the CME futures contracts. Also, these products are financially settled. This means that when the contract expiry date comes up for that future symbol, you're gonna not have to take possession of any Ethereum coins. What's gonna happen is if you're up money or down money, that profit is realized or lost. One tip I have for you here is to always close your futures contracts before the expiry date. If you want to push your trade forward, which is called rolling forward in the futures market, you simply sell the current contract and buy the next one. The way contracts are going to be traded is on a quarterly basis. So they have the traditional symbols like other futures products, mainly the equity indices of H, M, U, and Z. H is March expiry, M is June, U is September, Z is December. A quick way to know this is to spell the word hummus, and it spells hummus with a Z. So here's how it would trade. Today being February the 10th, with coronavirus, I forget where we are. Today being February the 10th, that means that you would be trading the March contract and it expires the third Friday of the month. That means your ticker symbol would be ETH, H, so Ethereum is ETH, H is the contract expiry for the month, 21 is the year of expiry, and that would be the futures product you would need to punch in order to trade what's called the front month futures, or the month that expires the soonest. Now, if you plan to start trading this, you have to realize margin requirements at the beginning are going to be higher with your broker. So what I would do is contact the broker of your choice where you hold an account or plan to open one, and inquire about what the margin is going to be in order to trade Ethereum. I'm going to put a little screenshot right here in a moment to show you what it is with AMP Futures, which is my broker. Now, as you can see, the margin requirements for a day trade are lower than the margin requirements to hold a position. This is the idea behind initial margin and maintenance margin. Initial means that you could open a position with this amount of capital. This allows you to trade with the minimal amount of money. However, if you hold it into the close at 5 p.m., because the market could fluctuate while you're not able to trade, this is when the maintenance margin or the higher capital kicks in. You'll need to have more money to hold that contract because there's a period of uncertainty in an extremely volatile asset. And this is why we recommend day trading Ethereum futures, but not necessarily using them for long-term position building. So how do you start trading futures? If you're interested to trade the Ethereum or Bitcoin product or any of the other futures that we trade in our trading room, there's a simple process that you need to follow. Step number 1, find a broker that provides you futures trading access in your country. We like AMP Futures. They're a preferred brokerage and go-to choice for their convenience, their low commission fees, their low margin requirements, and also their great customer service. AMP is a top choice of ours and a preferred broker, and we get zero money to recommend them to you. It's just by means of us using it ourselves. We understand the brokerage very well. If you're planning to look at another broker, by all means do the research. Find one that opens futures accounts in your country. So step 1 is open a futures brokerage account. Step number 2 is fund that account. With futures trading, you'll need to make a wire payment from your bank into your account, which for my case is AMP, who then receives the money and holds it for you. AMP will be the equivalent of a Robinhood, TD Ameritrade, or any other broker that allows you access to stocks, except this broker serves futures only. Step number 3, get a software that helps you chart these futures markets. A lot of platforms like Thinkorswim have the ability to let you trade futures and options and have integrated charts. But if you really want to dive deeper into order flow and understand how institutional traders trade, you'll need a little bit more of a complex software. The one that we prefer is called Sierra Charts. It's very low cost, and with the fees of the platform and the exchange, you could trade futures for just $50 a month, approximately. Step number 4, once you've opened your account, funded it, downloaded Sierra Charts and set it up, you'll then need to connect the two. In the futures market, you have a broker that takes your trades and transacts them on the market, and then you have a software that shows you your charts and sends trade instructions to your broker. They connect together, and the way to connect them is to, if you're using Sierra Charts, follow the instructions that they'll email you to connect the two. At the beginning, it's a little bit more of a cumbersome process, but once they're set up, it's gonna be running and you'll never have to do it again. And the last step is trade. Once you've opened an account, funded the account, downloaded your charting software, connected it with the broker, step number 6 is you're ready to trade, you're ready to get going. Remember, every time you trade, focus on risk management, have a disciplined approach when you're putting on your trades, and at the end of the day, focus on making this a career. There's a saying, there's old traders and bold traders, but there are no old and bold traders. The best way to ensure your survival is to have a quantifiable edge in your strategy and to be very disciplined at executing it. Focus on the process and the progress over profits. I'd love to hear from you. Do you plan to trade the new Ethereum futures? Have you traded them already? And how do you plan to incorporate them as part of your overall strategy? Thank you guys so much for watching this video. I hope you've learned a ton. Please remember to hit the like button and subscribe to our channel and hit the notifications bell to be updated with new videos. That's it for today. You guys manage that risk, trade like a trade pro, and I'll see you at the next video. Take care and goodbye.